Hey traders, this is Blake Morrow. You are
We're seeing
listening.
a black screen.
I put it on pause.
Oh, there you go. There you go. I can
that?
see it.
It's weird. I had it on. I thought I paused it on my ForexAnalytix screen, and then so I could go, peruse around on charts and stuff, and it just didn't work. So weird. You know how you always, like every once in a while, you'll say, "Hey, I see a black screen," and you'll say it to coach.
Yeah.
Yeah, there's something about pausing, because Dale does it too. Like if you put on your screen and then you go to pause it, so this way you can go back and look. So like I was looking at all the different,
Oh, yeah.
Aussie and all the charts. It for some reason goes black, and I know it does it for him too. It's a Zoom issue, obviously.
Yep.
Okay. I'm sorry. I'm just grabbing a drink really quick, and I was looking for my water, and now I'm good to go. So we are, in my opinion, at some pretty key levels in the markets right now. I'm really, I think we got to be really concerned with the prices where we're at, and I'm going to just point out a few things that have my attention. First and foremost, and this is what you guys are listening to right now. Oh, and I should tell everybody in the chat room. 1 second. Webinar phase 2. Come listen. Oh, morning edge. All right, because you guys know I'm bringing back the morning edge, right? One of the things I want to mention before I actually go about this is tomorrow we're going to have a little bit of a conversation, not with just myself, but with Stelios. And Stelios he's going to talk about his book. For me, I want to talk about trading size and my experiences the last several years. Trading size versus, trading for myself and being more of a retail trader, and the differences that I feel. So tomorrow is going to be an important face webinar for you guys to come listen to. All right. I'm excited to bring it to you. And I'm excited to talk about the things I'm going to talk about. And so is Stelios. So anyway, I just wanted to bring that up. Now, let's talk about what's important today and what's moving the market. So the one cue that we've been looking at in recent weeks is this dollar Mexican peso. I'll tell you, when I got up this morning and I knew where the Aussie was at, I'm like, okay, the Aussie's at 80 cents, okay, I get it. Copper, very, the sentiment's really too strong there. It's a little, I say too strong. It's not too strong. It was just the sentiment was too extreme, is what I meant to say. And then I saw the turn in not only the dollar Mexican peso, but also the US dollar rand, also very, very, very bullish this morning. I'm like, this is gonna be really important that the Aussie may roll over from this 80 cent level. This is 161% extension of the this is the COVID drop, right? And what I'm going to say is the generational low. We just hit the 161% extension. I think this is going to be a really good resistance up here. You have the dollar Canadian COVID high, post-COVID high lockdown. We are at the 127% extension right here. 127% extension of the COVID move. We're here. Then you take let's go over to copper, Dr. Copper. It exceeded the 161% extension, but obviously very, a little extreme. I think copper is going to moderate. Look, I'm not saying that this is it. Sell copper, it's going back to 250. I'm not going to say that. What I will say is we are in a really probably strong commodity cycle, and we're going to see some strong commodity prices and inflation moving forward. And I think you are better off buying dips than selling rallies. But that doesn't mean that that's going to stop me from selling rallies. Like I sold some Aussie this morning at 80. I was making my coffee this morning. I'm like, Aussie's at 80. I knew where everything was at. I'm like, stocks haven't moved. I'm like, I'm going to sell a little at Aussie here. So I already sold some this morning. If you were in the chat room, you knew that. Am I aggressive? No, I'm not. Also, I think I put it in the patterns in play too. You can see the position size is a half position size. That's it. I'm more inclined to buy the Aussie on a dip, and I really would love to see, the Aussie, trade back down towards the mid 70s and look for longs down here. But I think based on where everything's at, the risk is that we start to come off here. There's one other risk that I want to talk about before I go into the charts, and I got to get started on the charts. But we have a stimulus package that's going to be voted on and probably passed within the next couple of days, right? It's probably going to be passed over the weekend. It's going to be 1.9 trillion or possibly less. The market's expecting, 1.7 trillion, right? Or 1.9.
1.9.
Yeah, 1.9. But how about if it comes in less?
Yeah.
Is the market going to be happy with that? At these prices, at these levels, we've got to get everything. We price in everything. We better get everything, right? So I'm going to tell you guys that I think the risk is that, we start to see a little bit of a pullback in risk. Does that mean that, stocks are going to go, are they going to implode or go tits up? No, but I wouldn't be surprised, to see the S&P 500 pull back to like 3,600 over time. You notice the NASDAQ's really underperforming right now. Yes, the Dow hit new highs yesterday, but it's coming off. And the S&P did not hit new highs here. So, that's a risk. So let's talk about where we're at, and let's go ahead and fill out the bias chart so I can give Stelios a little bit of time to talk about whatever he needs to talk about. But I'm going to say that 39.40 is resistance. Then after that, we'll do 39.60, right? So 39.40, 39.60. We have to still come in with a bullish bias right now. We had a false breakdown. We're not bearish. You can't be bearish. That's why I'm like, I look at the Aussie and yeah, I'm short a little, but I don't want to be short, aggressively. It doesn't make any sense right now. But anyway, support, I think, is going to be back here at the 38.70 level. That has proved to be really a sticky level. I know we pushed through it the other day pre-Powell talk, but Powell gave us everything as a bull you would want. So 38.70 is support for now. All right, let's go over to the euro. So the euro, inverted head and shoulder pattern, where does that take us? Well, it should take us to the highs, I would think. But, obviously you're going to have some hiccups between now and then. So it should take us to new highs. Should. Okay. We are struggling with this horizontal resistance, which I was a little surprised at this morning. But I'm not surprised because if equities do like pull back a little bit, that's not going to be surprising, and how often do head and shoulder patterns work for you guys? Yeah, I mean, you can answer that question, right? they don't Or Mira asks if Steve's okay. Yes, he's in the hospital, dealing with a couple of things, but he's fine. Just he's okay. You know what, Stelios? I just realized I probably shouldn't have said that.
No, it's okay. It's fine. No, it's
Yeah, I mean, let's put it this way. Steve is fine. He's okay.
he's getting some checks done, basically.
Getting some checks done, just making sure he's going to stay okay.
Yeah,
that's it. But he'll be fine. So when you see him, welcome him back. Give him big kisses. He would appreciate it. Okay, so let's mark up 122.37 as resistance. That's going to be the overnight high. And then from there at 122.65, I'm going to write that down too. And we have to go bullish right now because I think it's playing the inverted head and shoulder pattern. I think we should be bullish while we're above 121.50. Okay, that should be support on the way back down. Cable. You know, I believe 142 is sticky. I think 141 is going to be key support. And right now the spike low here was 140.80. So we're going to write that. 140.80, 142. We're bullish. And we got to stay bullish while we're above this channel. So you know what I'm saying? We have to stay bullish here. But oh, Sterling just got a lift, man. It just rallied a little bit. I don't know why, but it just boop. Aussie. Okay, so Aussie resistance is going to be 80. Support right now is going to be basically 79.40. And then 79 cents. So while it's above 79 cents, we have to stay bullish. So 79.40. Yes, I'm short, but it's counter trend. So I'm taking a small position. That's it. And by the way, when you have a key support or resistance level like this, it's, you know, it is when you have a key support and resistance like this, you have to be just understanding that it can go, you know, it's an area. It's not an exact science. Support and resistance is never an exact science. Kiwi. I'm surprised. We made this move late in the day yesterday, and we were unable to really. Well, no, this was in Europe, but this late in the day, we can't really take out this 161% extension. So that means 74.60 is pretty key resistance right now. It is bullish, but support, I would give it all the way back down to these spike highs up here. So that would be 73.85 roughly. It's not great. I think that's going to be, you know, support on your way back down. Okay. Dollar Canadian. Dollar Canadian's bearish. I know we are finding support here at the 127% extension. Remember, that's 127% extension on a weekly basis. That's why this, I'm going to write it down as 124.70. Is support. This is going to be pretty key support now. We have to get all the way back above this level right here, 125.25 to take the downside pressure off. Okay, market's open. Let's see what happens with everything. Dollar Swiss. Now, hey, I got to point this out, and I know Stelios probably has something to say about this, and Polly brought this up in the chat room as well. Look at the short end of the curve. Look what's happening. Stelios, are you listening?
I'm listening. Yeah.
Yeah. Do you see what's happening with the 2-year and 5-year? They just started taking off.
Yes. Well,
Like,
when you see longer end rates move, they're not necessarily going to move. Although if you look at the absolute change in the 2-year, it's not, it's only a blip so far.
it
But
really is only a blip. You can see it's only a blip. But what happens if we really start to see, it take off? What happens with the low, with the front end taking off? What would you say at that point?
good question. I think that's definitely going to affect the dollar, but it has to make a proper move. This thing, moving 5 basis points or whatever it is, it's not going to change anything.
Nothing,
It's
right?
really not.
Yeah. Okay. So let's keep an eye on yields. And with that being said, the dollar Swiss, as I pointed out yesterday, I think the dollar Swiss is going to have support at 90.25. So I'm surprised it hasn't moved up with yields this morning, but that might be a function of maybe the market is seeing a little bit of risk aversion right now. Maybe, I don't know. So we'll see. I think the dollar Swiss support is going to be back at 90.25. I think I wrote that down yesterday. You have to realize there's trend lines that intersect right down here. So anywhere between 90.25 and 90 cents, we're going to find support. So I'm going to write down both 90. Okay, there's 90.25. And resistance is 91 cents. And I do think it's bullish. Just like I said yesterday, I know it's coming off right now, but I still believe it's bullish, right? US dollar, Norwegian krona. Now, this one's interesting because, I played it long, and when it broke through right where we're at yesterday, I took mine off because I'm like, it looks like it's going to break down, and it did. But what happened is we've created a little bit of a false breakdown. So Stelios, what do you say about this? We created the little false breakdown here.
We have in the if you look at the short term, we have, but this thing is going to be influenced by risk. End of story. Yeah. So unless risk changes, we're probably going to go lower. But like you said, in the very short term, false breakdown probably leads may lead to a correction higher, but I'm not sure yet.
Yeah, I think we need more time, right? So 830 is going to be the 127% extension. That's going to be support. 840 is resistance, and if we get back above, obviously 855, but if we start getting back above 842, 840, 842, then tomorrow I'll flip this back to range. But we'll see. There's a lot of work to do here. It's not, it's not like a slam dunk, but it is giving us a little bit of a false breakdown right now. Dollar Mexican peso. Obviously, the 50% retracement here is support. Resistance is at 2085. I don't know what else to say other than 2035, 2085. We break through. This is your what I would call the sandbox. Play in your sandbox for now, but you break out of your sandbox, you're gonna see it. You're gonna probably see a pretty aggressive move. So, 2085, 2035. That's key. That's a 50% retracement. It's not key support, it's just support. Dollar yen. So I thought the dollar yen was consolidating in in more of a triangle, but actually I think what it's going to end up being is more of a wedge. And here's the thing: if yields continue to rip, I don't know why we won't break higher. And I mean, I know Dale was looking for one more move up. I don't see why not, to get his third drive. He was like 1, 2, 3, we get a move up to 106.70 maybe, but we have to break this 106.25, which is a confluence of 38% retracement, and a longer term 38% retracement, and also, oh, I'm sorry, it's a 50% retracement right here. Longer term 50% retracement, and it was something else. But anyway, we're there. To figure out what that was. Let's see, the 50% retracement. What retracement was this? I had it as something else, and I can't remember what it is now. But anyway, it's going to be key. So it's going to be 106.25, right? I mean, support right now is going to be 105.80, but I think more important support is going to be down here like 105.25. So okay. Dollar index. So the dollar index, we hit the 78% retracement. We held, I have, and this is, you know, my big hang up with the dollar is I really don't know what to do with it. It's kind of like trading the euro right now. I'm not really too confident in the euro at all whatsoever. So, you know, I guess resistance is here. This spike high, that's a trend line, spike high trend line. So 90.40. Support is at, I guess, 89.67. I mean, because that's the 78% retracement. 89.67 and 90.40. I'm not convinced either way. Okay. We got the S&P. Let's do gold, silver. So here's silver. Same thing as yesterday. 28.44 is the 618. I'm going to write down support right now as 27.25 though. Obviously you can get down here to 26 again, but we have to get past this support, which is 27.25. And then 28.44, and we're in a range. Gold. Look, we hit the 618 and we held. So that means today's low is probably pretty important. 1778. Below that, you know, we have to go to 1760. So I'm going to write down both of those. 1760 and 17. Did I say 88? That's not right. 78. So I'm going to say 1780, basically. And resistance is, you know, 1815. Okay, let's talk about Bitcoin. It's my favorite topic ever. I love Bitcoin more
Steve's
than anything.
too.
Yep, I love Bitcoin. I love Bitcoin. So you can see I was actually talking to this UBS guy yesterday, and friend of mine, and he was just like, man, we were just talking about how frothy and excess, and he's like, it's just a few stocks. And I'm like, I know, it's ridiculous. The, you know, GameStop situation, the Bitcoin, the over excess and risk taking. He's like, man, we just need a healthy correction. And he's a wealth manager. He's been one for like 30 years. And he's just, you know, he's just like, man, I just really would love to see a 10-15% correction in everything, just to shake out weak hands and make people believe it's not a casino anymore. And it's like, I'd love to see Bitcoin correct healthy, like a healthy correction, you know, because that would shake the trees, because it brings in, you know, it brings in a dose of reality. So anyway, 52,000, we probed these highs. I'm actually going to write down 54,000, and then support being 48,000. So it is stabilizing though. That's the good thing. 48. I'll just do it this. Oh well, I'll type it out. 48,000, 54,000. Okay, and it is bullish. Okay, So there is your bias chart. It is finished. You know, S&P's stronger, NASDAQ stronger, Aussie's getting a lift.
The usual, man.
It's North America, here they come.
Yeah.
You know, that was it. You just got your 0.02% correction. It's time to hit all-time highs. I joke, but it's like, it's crazy, right? So there you go. That's it. I'm finito. What's up with
Cool.
what's up with you, Stelios? What do you got going on? What do you
I'm-
want to say?
I'm good. I can show a couple of things. Let me take the
let's do it.
screen.
Take it.
Desktop 1, share. There we go. So you guys know me. I look a little bit further out. I'm not a day trader or anything like that. So what has changed in the big picture for me? Nothing yet, but there are a few little things that I'm looking at. One is equities, and I'm looking at the S&P. We've been talking about this. The previous high got tested. Actually, was that one day where in European trading, the S&P dipped quite a bit, but then it just got straight back up, and it's still above. I want this to be broken, and when we do, or if we do break through this trend line, this for me is going to be important. And clearly, when I say things, if things have changed or not, I'm talking about, are we ever going to get a risk-off move? So I think if this happens, then I'm going to pay attention. Until then, nothing has changed. Similar on the dollar, I think this has been my view for a while. I think we are due for a correction. We're here. We're trying to make a double bottom. If we do, then there's a good chance that the dollar is going to get a lift. And depending then on equities, this lift might continue. We might get a nice little squeeze. But until that happens, I'm not doing anything. But most importantly, the one I'm looking at now is yields, because this is the big one. And we showed this yesterday. We showed it the day before. This is a very, very important zone. I think a close above 150 on a daily is going to be news. And I think that's what's going to push equities lower, because rising yields will push equities lower eventually. So if we do break above 150 and we break convincingly and we don't just come right back down, then I think equities are going to start taking notice. And then you're going to see equities lower, you're going to see cryptos lower, you're going to see commodity currencies lower. My favorite still being dollar Norway. On the long side, I know people might think I'm crazy because I love Norway, but I think that's the one that's going to move most. So
I can't disagree with you there.
Yeah, but to summarize, nothing has changed for me yet, but we're close. And if we do get that, then we're going to see equivalent moves in metals. You guys all know how much I like metals. I think this flag in gold we could easily go to 1720, could even push lower, and same with silver. So I'm long silver already. I'm long physical gold. I'm going to look to add more silver and gold via ETFs. And but not at these levels yet. I'm just sitting and waiting, which is very, very frustrating. But yeah, that's what I want to say. So I don't have, unfortunately, nothing's changed for me. So I have nothing new to say. I'm just mentioning what I'm looking at.
Yeah, I really believe that almost every asset is at huge inflection point levels, and it's like it's hard to be, it's hard to go, okay, I really need to be bullish or I really need to be bearish here. It's like you need evidence to start, suggesting otherwise, right?
Yes.
So I'm keeping my eyes on copper. Crude oil is also at a, I don't know if you guys saw that, but crude is at a 38% long-term retracement. I mean, that's like on its continuous contract. That's
Okay.
like a, yeah, I mean, and no, that's talking from the 150 peak or whatever we were,
Okay.
If you have to go way over to the, yeah.
Wow.
Yeah, now we're at a 38% retracement right now. If you go from that high to low, so you can see.
Yeah. Maybe you're looking at, is it this one? You know, it's not US oil you're looking at. It's some. It's is it WTI, CO,
Hold on, let me
whatever?
see here.
Oh, it doesn't
I'm
matter.
looking at I'll pull it up. Hold on. One second. I was looking at WTI.
Oh, WTI. Okay, WTI like that. No, that's not it. Let's see this one.
Here.
This one is much better than the other one.
It's, you know what? It's actually, since it's,
there you go. It's exactly at 38.2. Yes.
Yeah, it's the
Yeah.
Oandas, but you know, you can see the feeds are a little, you know, obviously a little different here and there, but still, you know, the fact is that we are not only there, but if you take the high from January of 2020, okay, or
Yeah.
I'm sorry, the high from September 2018.
Yeah.
We're at the 78% retracement, which is, that's a, you know, kind of a clean.
Yes.
Yeah. So we got a little bit of a confluence there.
Yes. Yes. Yes.
So
I like
yeah,
that.
I mean, I think you just need to pay attention to those levels. And by the way, the Dow is near its lows of the session. And remember, the Dow hit all-time highs yesterday. Now it's, you can just argue it's rotation right now, which it probably is, but just, you know, it's worth noting. I mean, you have the Dow that hit all-time highs. I know the NASDAQ and the S&P have been struggling, but the Dow's hit all-time highs. Now it's hitting daily, like intraday lows. You know, does that drag down the other indexes? I don't know.
Could do.
Worth
Yeah.
noting and worth obviously paying attention to. So, all right, guys. Well, Stelios, thank you so much. Hey, and let me mention this really quick, guys, before Stelios and I go. We are both going to be talking with Dale tomorrow. That's it's the interview for Face. I'm going to talk about trading in size and what it's been like for the last several years of trading, you know, and on larger accounts and larger position sizes, and you know, what it's, you know, the emotions tied to it, the everything, you know, in my experiences the last several years. And you know, and remember, I don't come from a working at a bank background like Stelios does, where Stelios moved. What I mean, what was a normal day for you as far as P&L goes, Stel?
Anything less than 100 grand was relatively noise, and basically my boss said, if your P&L is plus or minus 100 grand or less, just don't tell me. So that was that gives you an idea. My best day ever was just over 3.5 million, and my worst day was around 2. But yeah, so the swings were pretty pretty considerable.
They are, but I'm going to tell you, and I want to talk more. This is going to be really in-depth conversation tomorrow about the difference between trading for a bank and trading for an individual. So in size. So now I'm going to, I want to just stop it there, but I want to say, and Stelios is going to talk about LIBOR rates and his book. So you guys can't miss that tomorrow. I'll see you then. Stelios?
Yes, absolutely.
All right.
Thank
See
you,
you guys.
everybody.
Have a great one. I'll see you on the daily roundup in a few hours.
Bye-bye.